Before we take a look at what we're expecting from quarter two, let's just have a quick glance back to the performance of the market over quarter one. Relative to global markets, really underperforming. It's still positive though, the DCI up around almost 1%, the FCI up 1/3%. But your views on the perhaps lackluster performance if you look at it on a relative scale?
If you look at the market, what really drove the market this quarter was mainly bargain hunting from value investors. If you look at your stocks like Imara, Cresta, Tenstar, BIHL, and FNB, those were the stocks that investors we experienced a lot of demand from investors from those particular stocks.
How did the banks perform over this period? Because, of course, we have seen banking results coming through from the likes of Barclays, Standard Chartered, and the latest from ABC. What are your views on the performance of the stocks relative to how their results and the results that we've seen coming through from them?
Well, if you look at the banking sector, well, the banks have performed pretty flat this quarter. I mean, if you take specifically Bank ABC, they just released their result recently. Their loan book almost doubled from 3 billion to around 6 billion now. Well, relative to its share price, you have to remember last year ABC was one of the best performing stocks on the market. So this quarter we saw some profit takings on the stock. But going forward, obviously we expect to see some demand coming out on the stock.
As you say, doubling their loans and advances to 3.1 billion pula over the period, but even though it was the best performer last year, it's sitting flat right now and is still your top pick in the sector. Why would you be buying ABC over the likes of a bigger bank like Barclays?
Well, one most important thing is their lower PE ratio. I mean, if you look at the industry average for PE for the banking industry, it's around 10.2%. And then if you look at ABC one is around 8.0. And the other thing, obviously, is their geographical footprint. And obviously, they recently went into retail space. So we expect retail space to drive growth for the bank going forward.
Looking outside of the banking sector, we've also seen some results filter through from Cresta Holdings. It's pretty hard to analyze these results given the fact that they're for an 18-month period. But what were your views on the numbers there, looking at a 24.8 million pula net income for that 18-month period to the end of December?
Well, from our point of view, Cresta results are pretty flat. I mean, mainly because, as you mentioned, because of changing their financial year.
So views on the counter right now, as you say, flat results, change in the financial year, but drilling into the performance there, is the company holding up well right now?
Yes, I would say the company is holding up right now. I mean, if you look at their earnings per share, it went up around 10%. So, and they also declared a dividend of 410. So I think going forward, the company will be able to give better returns on investors' funds.
RDC Properties also doing well, an impressive 238% rise in net income for the 12 months to the end of December, and also giving us an update on their construction of Massa Centre. That appears to be progressing well. Based on these results, do you think the company is a good one to be buying into? Would you be getting exposure to the retail sector right now through RDC?
Yes, I would think so. If you look at RDCP results, the significant growth was mainly because of increase in surplus on revaluation of their investment property. As you mentioned earlier, Massa Centre, they included the revaluation of their property there and also work in progress for Massa Centre. But if you look at the real earnings, cash items, growth was pretty flat for the period. But as you mentioned, going forward, we expect to see some growth on the stock, considering looking at their building, Massa Centre, which will be open officially within the next month.
And Karabo, before we go, we're waiting for results from Letshego. Of course, those highly anticipated. We're expecting a significant improvement in profit after tax. What are going to be the key highlights of those results for the period to the end of December?
Well, the key highlights for those results will be eagerly awaiting to see the loan book for Letshego and obviously impairments. You have to remember, after the government decided to cease facilitating facilitating the salary deduction code from the source, we have to see whether there were some default payments on the loans.